All right, hello there, fellow investors. Time for another monthly update on the portfolio. March has been a bit of a a bit of a flat month, really. Not a whole lot going on, not a huge amount of buys and sells, and not a lot of movement in the portfolio, really. But before I dive into all the stats, you may notice a bit different background. I've moved offices in the house. I've moved from upstairs to downstairs, so I'm in a different room. The lighting is shocking at the moment. I need to get another light because this room is not as well lit as upstairs. And the background is a bit bland at the moment. But I've just moved in here, so I'm still getting things in place. So excuse the bland background if anyone really cares about that. But let's dive straight in to how the month of March went in terms of the portfolio. So the usual slides that I show, these are all pulled off Stockopedia. So the first one, this is my return for the month of March. You can see here from the 1st of March to the 1st of April. So what's going really well. And then there's definitely been a pivot in the last couple of weeks, I think, from kind of growth stocks motoring along to a return to value stocks. So that's why it's still positive for the month, but 0.76%. Not amazing, but still positive. But the last couple of months we have trounced the FTSE All Share. This month the FTSE All Share has trounced us. So yeah, 4.2%, and I think that's definitely a return to the value side of investing. A lot of more value orientated stocks have been starting to pump a bit, and a lot of the growth stocks. So I'm invested in quite a few American growth stocks. A few of the big seven, they've kind of stalled out a bit. So yeah, we were doing well, and then that kind of happened, and everything's kind of tailed down a bit. But not the end of the world. The strategy is still the same. We're not going to change strategies after just a couple of weeks of poor results. So that's for the month. For the year to date, we are at 4.49%. So 3 months in, which is okay. So that's a quarter of the way, isn't it? So compound that up. If we did that for the rest of the year at that rate, we'd be over 20% for the year, which I'd be very happy with. The FTSE All Share is catching up with us. So hopefully for the month of March, we kind of return to a slightly stronger growth rate. And you can see from here, I'm still 20% cash. What I'm going to do, because I've just put some more money in, because I'm filming this now after the 5th of April. I've put more money in just so it gives a more accurate reflection of how the stocks are performing. I'm not going to add the cash to this portfolio because the cash will dilute how the stocks are actually performing, if you know what I mean. So I'm just going to add cash. I'm going to leave this cash in there, but I'm just going to add cash to this as I buy stocks, I think, because if I add all the cash in here, it's going to be a far higher proportion of cash, and it's not going to give a true reflection of how the actual stocks I'm purchasing are performing. I don't know if that's the normal way of doing it. It might disguise true results slightly, but that's the way I think that I'm going to run with it for now. And then the other one we always show is the all-time results for this portfolio, which started at the beginning of March 2022. We're up 17.44%, and in that respect, we are still trouncing the FTSE All Share, even though the FTSE All Share has been on a bit of a charge the past couple of weeks. And then a quick overview before I get into the buys and sells. This is the portfolio as it was at the end of March, the 1st of April. This has actually changed a couple of stocks since then, but that will be in the April update. This one is organized in percentage gains, so you can see which stocks have been performing the best, and vice versa, which ones haven't been performing so well. So Meta's still far and away the best. It's been a real boost for the portfolio, up 178% now. With a decent gain, and it's a decent chunk of the portfolio as well. It's around 14% of the portfolio, I think. But you can see, heavily weighted at the top end of performance-wise is, just want to check my mouse is showing up, yeah it is. Performance-wise is the US stocks. So we've got Microsoft, Nvidia, and Meta are three of the kind of the big seven that have been doing really well. And then there are a few UK stocks in there. But the big growth for me over the past kind of several months has been, or probably a year or so, has been the US stocks. And then it's a similar table, the same table, but I've organized it in valuation. So this gives an indication of how my portfolio is weighted. As I said, Meta by far and away the largest. And then there's quite a few small positions down the bottom, kind of 1,000 to 2,000, which is, I've been reviewing strategy, which is something I'll come on to in the end. Not strategy, not a change of strategy, but more refining the strategy in terms of like entry sizes and that type of thing. But I'll talk about that more in a bit. Right, so in terms of buys and sales, as I say, not many this month really. So we've had, I'll come on to trading view. We've had 3 buys, only one of which is a new stock to the portfolio, and 1 sell. So the buy, the one that's new to the portfolio, is Pool Corporation, which I've got up here. And as you might guess by the name, they supply pool products, maintenance products and things for swimming pools, and materials and things used in the construction of swimming pools. So if you look at the long-term chart, they had a huge boost during the COVID lockdowns because everyone was stuck at home in the US just as they were in the UK, and they were all doing home improvements. Everyone was wanting to buy a swimming pool, getting a swimming pool installed, so they had a huge amount of business from that, and then the ongoing maintenance products from that as well. They had a huge tumble, along with a lot of other stocks, to be fair, but once that kind of hype passed and the construction of pools kind of fell quite a bit, with the economic environment and people not having as much disposable income as well once everyone went back to the normal life. But they've been kind of bouncing along here. They released some quite negative trading updates during this period, but the last one was starting to, in my opinion, show signs of improvement. So I think it's a good point for entry, and I used my usual setups. It wasn't the most perfect entry at all. So one of the things I'll discuss later is I've been going back through all of the stocks that I follow over 10-year periods and seeing how the strategy would have done. But this is where I entered. It's not looking great at the moment, but I think it will be fine. This is where I should have entered, on this big spike up here, breaking through this resistance. But I missed that for some reason. It might have been that I wasn't following the stock then a few months ago. I can't remember when I actually researched it. But I entered here, and even here I should have been entering here as it broke through this prior resistance level. But I waited a few days. Just uncertainty, which is one of the reasons I've gone back through to test a load of stocks to give myself greater conviction. And I'll come on to those stats in a bit because I think they're quite convincing stats for how the strategy could have performed over the last 10 years and hopefully will perform over the next 10 years. Even though I know 10 years isn't a huge amount of time in investing, but it's a start and I may go back further and test it even further. But yeah, we entered here. If we zoom in on this chart so you could see it as if it was at the time, it looked like it was breaking out and was going to keep running up. So I bought here with the thought that it was going to continue up. I've got a stop down. You can just see this red writing here, this line. That's my stop, which is 10% below and just below the 50. And it came down to test that, bounced back up. It's come down again to test, bounced back up. So I think it may do 1 or 2 more bounces. It may fall through and get stopped out, but I have a feeling it's going to continue upwards in the next month, 2 months, 3 months or so. So we'll just hold until either it continues up or I get stopped out, one of the two. But it's a company I like. It's a very simple business to understand, which is one of the things I'm really looking for at the moment as well. And I'm happy to have it in the portfolio for now. So the other 2 buys were both add-ons. So this tab down here, all these you can see on the right, this is my public portfolio. So this is all the stocks I own at the moment. Viva Systems. So this was an add-on. So we started the position back here in May of last year. Bought a couple of times in this uptrend. Really, with my new strategy, I should have been stopped out here, but I continued to hold. And then it's come back up and it's broken through this prior resistance level. Again, not I need to work on my execution. So I've got my rules in place, but the rules are only so good if the human behind them, i.e. me, is following them precisely. And I am finding I am sometimes, well, quite often lacking the conviction to pull the trigger when the setup is there. And I know I should be doing the buy according to my rules, but I hesitate. And it's the same on selling as well. So it's just human nature, and I know that. I just need to start executing more. But yeah, we should have entered on this day. I waited until the next day and entered. It's looking good. It's done a pullback. This was on the news. This drop here was on the news that their CFO resigned. So they put out a statement saying it wasn't for any kind of like negative reason. He didn't have any issues with the company or anything, or there weren't any kind of hidden accounting errors or something. I think it's just for personal reasons. But that did cause the stock to take a drop that day, and it's bouncing along then. So unless something comes out to the contrary of their statement, I think it's all fine, and it shouldn't have a huge impact on the running of the business. So I'm expecting that to continue upwards. That's just unfortunate timing. It didn't come down to my stop, so I'm just continuing to hold. So far going well, and that's Viva Systems. I've run through them before with you because I've held before, but they're so they provide like software for the healthcare industry, for tracking kind of like the life sciences industry. So if a company's developing a drug or a new medicine, something like that, then their software will be used to track all of the data and all of that stuff through that whole process. There's more to it than that, but that's effectively what it is. And it's seeing quite a high rate of adoption. A lot of the big pharma companies are taking it on board and using this technology, paying for the subscriptions and things. So I think quite a good company for the long run. And you can see it's been, I guess you could say from here, it's been trending sideways, but it's in kind of an upwards momentum. So I can see this being a good hold for the next kind of year or two. And then finally, the final buy, which was also an add-on, was Phonics Mobile, which I talked about last month when we had our original entry. Oh, no, it wasn't back in December. I'm losing track of time. So I won't talk through what they do again. But yeah, original entry was back here. It's kind of been doing okay. Set up this, it was going sideways for a while. It broke through this sideways action. Again, I didn't purchase the day of. I need to work on my execution. I purchased the day after. I have that uncertainty that, is it going to hold and pull back? And I wait until the day after when really I should be entering on the day as long as there's volume, which there was. And it's pulled back to it. I almost got stopped out yesterday. So my rule on getting stopped out is it has to close below my stop, and it was down there most of the day, and then right at the end of the day, it just popped back up. This was on Friday. But holding for now. I may be out of this on Monday, but for now I'm holding, and we will see what happens there. And then the only sell, so this won't be in the public portfolio because it's not there anymore. My only sell is Google, which I have held for quite a while. Terrible entries. This was the start of this where I had my checklist, so it passed my checklist, but I didn't have any of the strategy in terms of when to enter a stock according to kind of charting. So I had no idea about not entering in downtrends and things. I mean, I did know it was a downtrend, but I had that value mindset that I was just buying at lower and lower prices and averaging down, which I don't do anymore. But I bought all the way back here, bought here again. I didn't buy here for a very stupid reason, but the reason was that the exchange rate was so poor. It was back when it was like, I can't remember which way around it is, but incredibly weak pound, like $1.05 to the pound. And I just thought when it goes back up to 140, 150 to the pound, then I'm going to be losing 30-40% of my investment straight away. With hindsight, that wouldn't have mattered because it's had such a good run, but that's why I didn't buy down here. But then it's run all the way back up. But because I bought at such high prices, I didn't get most of this gain. My rising stop, so as I've said in the past, I raise it to low points. So when it comes down here, and once it starts moving up again, I'll raise it to that point on the 150. We had another one come down here and up, so I raise it to that point. Another one come down here and up, so I would raise it to that point. And I kept doing that all the way up, and this was the last one, which was here. And when it came down through this stop, I knew, I didn't know obviously, but I had a very, very strong suspicion, because Google's been performing well and is exposed to AI and everything, that this was just to shake out the weak holders and it was going to shoot straight back up. And that's exactly what it did. But I don't mind. Obviously, it's a bit frustrating, but I don't mind because I stuck to my rules. My rule is when it breaks the stop and it's down there, closes below there and is there the next day, I sell. That's exactly what happened, so I sold. So I can't beat myself up about that. If down the line there's something I can adjust the strategy, then that's something I could do, but these are things that are going to happen. And if I'd been holding from the bottom, I should be entering here, then that would have been a really good gain. As it is, it was only an 8.3% gain, which for this huge move is not very good, but at least it's a gain. There's a bit of a spoiler for next month. I've recently re-entered as it broke through this high point, but that is for next month. So while we're here on TradingView, so the last week or so I haven't been posting anything on Twitter. If anyone posts on Twitter, because just none of the companies I follow that are on my watch list or anything have actually released any earnings. So I've not had any kind of snapshots to do. And instead of researching new companies, I've been taking the time to go through every single stock on my watch list, US and UK, back 10 years. So all the way back to 10 years. And for every single stock, I have gone through and zoomed in as if I was going through it live. So all the way in like this, and then just moving it along very slowly as if I was doing it live, and gone through all the 10 years and put in. So I'll stop jumping around the screen in a second. Let's zoom back out. And put in every time I would have made a trade, whether that trade was successful or whether it failed, so green or red, and the gain or loss that I would have had according to my current strategy, and the potential gain I could have had if I had kind of like sold at the peak, which obviously you can't do, but I just wanted to record what the difference was in what I would actually lock in and what the potential could be, just to see if there's any reason that I should be like automatically taking a profit at a certain percentage, like automatically if it gains 20%, take 50% or something. Take like sell half of my holdings or something like that. So I was just curious to see what the differential was. So this is Google. I've done it for all of the stocks on my watch list. So this is a recent addition to the watch list. Dexcom, they do diabetes monitoring products. I've done it with this one, and I've done it with all of them for all of the UK companies and US companies. Qualcomm, so that was quite a successful one. Qualcomm would not have been as successful. So you can see a lot of failed trades there. But out of the 50 that I tested over a 10-year period using this trading technique, only 3 would have actually delivered negative results over that 10-year period. So if I go through some stats, I've done a huge spreadsheet on this and inputted all the data. It's taken me over a week, which is why I haven't been posting on Twitter. I've really been diving into this. Because I just want to check that it works. And obviously this is only a 10-year period. So I think I'm currently going through doing it with stocks that aren't on my watch list to see if there's any difference in quality. Like if having a higher checklist score improves the results, or if it doesn't matter. Because if it doesn't matter, then I'm doing a lot of research that I may not need to do. But once I've done that, I will probably go back and extend all of this to 20 years, because TradingView goes back, well, the subscription I've got, TradingView goes back 20 years for stocks that have been around that long. So that will give me more data and more confirmation. But as it is, it's 10 years. I've done 50 stocks, it might be 51 or something, but roughly 50, which is all the ones that have passed my checklist. Let me hold this sheet up so I'm not looking down too much. But yeah, so the average return per trade for that whole period. So this is only picking the best spots. It's not day trading. As you can see, this is over 10 years. It's on average like less than one trade per year per stock. But the average return per trade was 27.92%. So obviously that is very good. And if I could replicate that for the next 10 years, then it would be hugely successful. Even if it was half that, even if it was 14%, that would still be good going. But of those 50 stocks over 10 years, some of them less because some of them haven't been around for 10 years. So some of them I've only gone back 5 or 6 years if they're fairly new companies. But over that period, there was only 267 trades in total from 50 stocks. So it's very much only trading at the best setups, the best opportunities. And obviously a lot of the time it doesn't work and gets stopped out. But I've put a rule in here that the maximum stop loss is 10%. It could be less if there's like a support level nearby, but the max is 10%. So when I'm losing 10%. And when I'm winning, I'm normally winning more than 10% and sometimes a lot more. So if we go on Meta, for example, let this load up. So there's like a 400% gain in Meta here for this whole period. And then small ones like 2%, 9%, 3% with a loss. So this whole period here wasn't very profitable. But then here you have another, this is what we're in at the moment, 93% locked on the stop loss, but 185% running. But following enough stocks, having enough stocks on my watch list means that I can just watch a stock for years and not do any trades and wait for that perfect setup. And hopefully most years there'll be a few stocks that are setting up perfectly and I invest in them, kind of trade in them. So what this has taught me is there's not huge amounts of opportunities in terms of quantity of trades per stock per year, but the system works. So the way of me increasing the gain from this is either reduce the amount of stocks I'm holding and increase my conviction, and instead of investing kind of 5% of my portfolio at a time, go up to 10% or more, or, which I will be doing anyway, is keep researching and increase the number of stocks that are on my watch list that have passed my checklist. So I've got a bigger pool to choose from, and there's just by default going to be more opportunities available at any one time. So a few more stats from this. So I was curious as well to see what the difference would be between the US stock market and the UK stock market with this strategy. And just from no evidence, I assumed the US would deliver far better results. It does deliver better results, but not by that much. So the average return per trade for the US was 29.11%, and the average for the UK was 26.19%. So 3% less, basically, but still 26% on average per trade is good. So the UK is definitely worth keeping in rotation, continuing to research and kind of trade and invest in. And then in terms of sectors, the 3 best performing sectors, and bear in mind this is only 50 stocks, I'm very aware this is a very small sample size, but the 3 best performing ones were kind of basic materials and energy. I grouped that into one sector, technology, and cyclical. So it's very clear that these kind of setups work for high growth companies, so that covers the technology, and cyclical ones where they're going to go up and down and up and down. So basic materials and energy and things, and cyclical stocks in nature. So those 3 best. But everything else, all the other sectors were still very positive. And the worst performing sector was industrial, but that still had an average gain per trade of 15.4%. So still, in my opinion, very worthwhile doing. It's just if there was an industrial stock setting up and a technology stock setting up at the same time, and I only had the funds to invest in one, I'd go for the technology stock. So it's useful for me to have this kind of hierarchy of which ones are best. So if multiple opportunities come up at the same time, I would invest in the one that's more likely to deliver better returns. But anyway, I thought that for me, this has been really useful. It's given me that conviction that this strategy works as long as I execute to my rules. And I've gone through this trading strategy in prior videos, so I would go back and look if you're interested in my entries and things. I will do a separate video on it though, I think. Once I've finished all of this data, I'm going to do a dedicated video on my entire kind of process with evidence and stats to back it up, just because it's too much to get through in one of these update videos. But yeah, it's given me conviction. So I'm sticking with the strategy. I just need to be a bit better on execution in terms of conviction. Just having confidence that the system's going to work, that there are going to be ones that fail. There's going to be several losses, but if I cap that to around 10% and let the runners run, then it should work. So I thought I'd just jump on and show a couple of UK stocks because I've just shown the US ones. This is Hollywood Bowl. So this is my back testing. It's only been around for 10-ish, well, less than that, 8 years. But you can see more wins and losses, but not huge, but still profitable. Games Workshop is a different beast. Games Workshop, as you would imagine, has performed incredibly well. A 360% run up back at the start, 50%, 27%, a -9%, and then a 24%. So there's plenty of opportunities out there. And I do need to test whether the quality of the company makes a difference to results. And I think it does. But that's something I need to. So I'm just going to test a kind of like a selection of another 50, but very poor scoring stocks on my checklist and see if that actually makes a difference. If it turns out that they're gaining the same amount, then I don't need to put that effort into researching maybe. But I have a strong suspicion that the quality of the stock is going to make a big difference because this kind of run up, you're not going to get from a really poor quality stock. But I'm going to check it. But anyway, yeah, it's given me strong conviction in the strategy and strong conviction to potentially go a bit more concentrated in my portfolio. We'll see how that goes. But at the moment, it's 20 stocks in the portfolio. I don't think that this strategy is going to give me enough opportunities, the perfect setups maybe, to have 20 stocks in the portfolio. So I may need to be a bit more concentrated and have like 10 or so. But we'll see going forward. So that's what this video series is all about. It's me learning, developing strategies, experimenting with different ways of investing. As I say, I started out as a pure value play investor, and I've kind of transitioned into more of a position trader. So working on fundamentals, but kind of selling when stocks turn into a downtrend. So I'm not losing all those gains on the way down. And yeah, I'm enjoying it, and we'll see where the process goes. Anyway, I've been rambling and waffling for long enough now. I hope you've enjoyed the video. I hope you've all had a good month of March. I expect those of you that have been more value orientated have had a really good month. So congratulations to all of you. And yeah, I'll be back at the end of April for the April update. So good luck with your investments, and I will see you soon.